Right, we're back. Dan, blink if you're safe. You look like you've been held hostage somewhere.
I'm just being I've been taken hostage. I do have a little phone here to call for help. Hello. I've been kicked out of the front room. I'm in a basement in Goblin Town. But good morning, gentlemen. How are we?
We're good. Cut my positions. Taking a break from the market per se. Obviously keeping an eye, but it's a nice relief to not be exposed to the market because it's just way too difficult to make sense of it for me anyways at the moment. I think the market is really only suited for the LARPs and for the people who know what they're doing, but mostly for the LARPs. Because right now, if you don't know what you're doing and if you don't have your finger on the pulse, you will get wrecked.
Yeah, I'm good as well, Dan. I'm not being held hostage, but no, same as Jedi. It's like I don't know. It's a little bit too unsure for my liking at the minute. So the vast majority is cut. There's still some large positions still open. XMON, GMX, fold. But that's about it for me. Not really. Just anything long term still there, but it's just way too. It's not even a good place to buy, in my opinion. No one's going to be buying there. Bitcoin looks like arse. Dixie looks like it's running the show again. Can bring that up actually, so just have a bit of a reference.
So we made. Yeah, like, I mean, Dan, sorry. Carry on.
Go on.
I was going to say that Dan and I obviously, we were just, by the way, we were a little bit lost in the wilderness with Archie on Friday. It was actually quite difficult to find any sense of direction with Archie. It was a bit of a baptism by fire, but I think we did quite a good show around just. I think we were quite neutral in our perspective around what was happening in the market. We started out with the Dixie, and it was a general consensus that it's running the show and that things are going to get rough over the course of the weekend. And it's not often we get to stand on our soapbox and claim the call that we made, but we made it, and it played out. I mean, we were kind of hoping that ETH would have bounced a bit better, in light of the merge narrative and the rest of it. But it just really, irrespective of the merge, right now, I mean, obviously that can change, but right now it just seems like, the merge is kind of in the back seat and the Dixie's running the show. The S&P 500 is also taking a beating. And the projected outlook from my perspective right now is that, we're going to see further downside, possibly test that 4,000, maybe even a bit lower than that on the S&P 500. And obviously Bitcoin and everyone in the crypto space or everything else in the crypto space is going to follow suit. So that's my take on it at the moment. Would love to hear what you guys are thinking.
Yeah, like it's unfortunate that it's one of those calls where it's one of those things that you point out, but you kind of like just hope is wrong. Like the fact that we're saying like the Dixie was going to go up and it's gone on a parabolic turn and everything comes down, and the fact we were right, it's just like, oh shit. You're right, but you're right in the doom and gloom sense. But I don't know if you remember, like last week or just week before, just the newsletter, we could see where the SPX had started to lose steam, and we said if it was to break the 42, 43, it would race up to the 4,400, but if not, it would go back into Goblin Town at the 4,000 mark. So I wouldn't be surprised with this week and the fact there's not a huge amount like going on if we don't see a little bit more downside. If I'm completely honest.
I mean, the relief was just a wider counter trend, kind of counter trend player. But yeah, haven't they got like a big Illuminati meeting this week where they go through and
that's
talk
on Friday. That's the Friday at Jackson Hole. I mean, then they choose the place quite aptly, don't they? Like let's go to Jackson Hole and let the reserve bankers and Mr. Powell get together. So he's speaking on Friday. I'm not really sure to what extent and how relevant that's going to be. But the market's obviously not happy at the moment in terms of traditional finance markets. And we're obviously feeling it on the crypto side of things.
Yeah, because again, it's just one of those things where I have no business. Like, this looks terrible. Look at the state of this. Euro losing parity against the dollar. The only kind of, I suppose, the only silver lining in that is that the vast majority of people sat in stables, hopefully haven't cashed out and realised to their bank accounts, and they're outperforming their euro cost basis, particularly if you're based out where in Europe. I think the pound's getting beaten as well. Everything's just getting destroyed by Dixie. Obviously, we've seen the Dixie rip up, but again, I have no business trading when I think like CryptoDog posted something similar the other day where it's like, I'm very, very good in a bull market. And whilst things are chopping, I have kind of no business playing around here, even though you get those urges and impulses to go and apply what you were naturally doing in a bull market. And I mean, we got that kind of relief for like 4 or 5 weeks, which turned back into kind of intermediate mode, and now we're back in hard mode. I mean, I'm not a short seller whatsoever. I've never ever found an edge in that. There's way too much volatility. The lizards are meeting on Friday, so for me, it's just wait it out. Long term conviction, like the metrics are moving in the right direction for some of the bags, like the GMX.
Community member. It's not a long term hold; it's a community member.
No, but those metrics seem to be moving in the right direction.
Yeah.
GMX was least affected by the last drawdown, along with like BNB, so I'd expect something like similar performance. I can kind of ride it out as long as I'm not getting like immediate 30% drawdowns overnight. So that's about it. Let's have a little look at ETH, see what it's doing. The merge is a scam.
Yeah.
The thing is that it's not, though, Grant. I mean, I don't necessarily agree with that statement. I know that you're joking. I know that you do value it for what the outcome is going to be. At the same time, it just really is interesting to see that you can have such a significant event, because the merge is a very significant event. You're essentially taking an asset and you are essentially turning the switch and creating a deflationary asset, which is huge. It really is huge. Gas is going to continue to burn ETH away. There will be almost like a tipping point, and that tipping point will come. But obviously the market right now doesn't really value that around, this huge event. It's like there's other more important. It's almost like the fuckery that's currently in motion is more important than the fact that this thing is going to be a deflationary asset. So you can't. It's so hard to be dismissive of the fact that we're about to essentially turn the switch on something that's been like inflationary for how long? Since its inception. Like miners have mined, and rigs have been running, and a shitload of money has been put into that, and now that's being switched off. And I don't think enough has actually been commentated or written or spoken about in terms of, the significance of how miners are going to be out of pocket around this thing. Like hundreds of millions of dollars, if not billions of dollars, have been spent on equipment and the energy and the warehousing and all that kind of stuff to mine ETH, and that's all about to end. And I personally don't think it's being priced in. So I'm very bullish on the merge. It's just a shame that every other aspect of the market is dictating, where it's at and what it's behaving like at the moment.
Yeah, I'm gonna say I don't agree with you there. I think potentially short to mid-term bullish. Oh, what's the best way to word this? A lot of bullish things are happening right now. So probably one of the biggest one is the hash ribbons, where that flagged up, buy Bitcoin now, buy. Generational wealth happens now. But if you actually look at what's going on the one, I think this is why Ethereum isn't pumping the way it probably should, going into one of the biggest events that is going to go down in the literal history of crypto, is because of everything else that's going on in the world. Because right now, for me, sometimes crypto feels like a video game, right? it's one of those things that can be put to the side when, you know, shit hits the fan. And figures this morning, like what, 18.6% UK inflation. Like, there is so many more important things than this technological revolution that's going on inside of this and Twitter, right? There's so many more things, which is why I don't think it's probably going to get the justice is deserved. But if it pumps back up to like 2,500 for like people's break-even point, awesome.
But isn't that in and of itself, like, everyone knows everyone in this space is a complete degenerate and can't hold a bag open for like longer than 3 seconds. So, like, aren't, as always, on long-term kind of patient capital going to win here? So it's like, there's almost certainly this isn't going to be priced in, particularly at this price point. And if we start seeing lows again, then that's obviously not. If people were buying at 3,500 because of the merge narrative, then surely 900 or 1,000 is, again, generational opportunity. So it's like those people who are going to play the long game and just kind of not get too emotional about it. And obviously you're going to get those people who fill in the gaps in between, but just trying to like sit on your hands, slowly kind of enter in and allow the merge to play out properly in an environment which isn't completely dictated by what Mr. Powell has for breakfast on a morning and things like that. So like any rational person would just be like, yeah, I'll just buy a little bit here, I'll just buy a little bit there, and like build their position around this kind of range that we're in and just allow the merge to play out long term. But, you know, we're in a space that's like completely ADD ridden and just people can't actually, because there's so many shiny things out there that's going on. It's like patient capital is completely a scarce asset in the space, isn't it? So like that's what that's logistically what like the head's saying, but then, you know, it's a bit painful to watch like 50-60% drawdown even at the lows, and then like those bottom ticks like down here, it's like you like question reality. So yeah, it's a braver man than I that plays that game anyway.
Because if you do look at that bottom tick, like that's quite clearly an M forming. That is like the biggest, most, hey, look, this is an M. The chance of this going down could potentially be strong, as we know from the old Russian investor. M's are bad. M's go down, down, down. So the fact that it pumped back up was, on the daily chart anyway, almost looks like a bit of a miracle.
Well, that's the merge, right? It could only be the merge. It can't be anything else.
Is that what that from like June to July, where it's got that big M? Is that the sign of the merge narrative actually kicking in? Look at that.
I think so. Yes, there is no other explanation that can justify that.
The letter M,
because you've got a technical analysis technical, like the golden rule of technical analysis being broken here. It's one of the golden rules. You know,
yeah, it's because the same time Bitcoin was just like, meh. This is something that I don't know how this issue gets solved. It's kind of like it's a maker of its own doing, in a sense where liquidity is getting drawn to ETH, but still the markets are completely obsessed with the fact that Bitcoin rules the market for it doesn't matter over what time frame. So I don't really know. Like, that is absolutely terrible price action. it's horrendous.
We've got a classic case of, you know, kind of like a little bit of a philosophy discussion here, and also a very practical discussion. Is that Dan asked me earlier on, like, what are the attributes of, you know, what entails a bear market, and maybe there's a bit of alpha in the experience that I've been through, is that, you know, what we saw in the last 45 weeks is exactly what a bear market looks like. Now take that as a relief rally, and then look at maybe 3 or 4 of those over a 12-month period or a 16 to 18-month period. That's what a bear market looks like, is that you get fake outs, you get these pumps. I mean, you get individual pumps. A classic example is EOS at the moment. It's done 20%. And there's a whole lot of these little narratives that play out, and whales and manipulation and all that kind of stuff that's playing out in the market. And what happens is that people forget that we're in a bear market and this is what happens, and you've got to make sure that you are playing a game where you either get in early and you catch it, or you're going to get wrecked. There is no in between. I promise you, 90% of the time, you're either catching it early and you have a heads up on it, or you're on the arse end of it and you're going to get wrecked. Ladies and gentlemen, that is what a bear market looks like. Do you want to participate in that? By all means, if you've got big bags and you're quite happy to get wrecked more often than not, then by all means, if it satisfies your boredom, then go for it. But if you know what it is that you're doing, you can make a shitload of money. I mean, there are guys out there who are genuinely making money. They know what they're doing. They've done this before, and it's there. The opportunity is there, but you've got to know your stuff. You've got to know your technical analysis. You got to know how to play this market in the safest and the most efficient way possible. And if you're not, trust me, I've said it 3 times now. 4th time, you will get wrecked.
Yeah, because
what would you say is like a smart way to play a bear market then?
Sit on your hands, don't do anything.
It's exactly what Grant said. Coming back, let's circle back to what he said. It's actually all about accumulation. It's all about, you know, there's this whole idea about like dollar cost averaging. Dollar cost averaging, in my opinion, only works when you're at the lows. And it's kind of like, imagine having had $20,000, right? And you started buying $1,000 tranches, for argument's sake, at around 900 to 1,000 to 1,100 to 1,200. You'd be net positive now if you had been DCAing in all the way from the bottom, all the way to the top, and then even revisiting the bottom and still buying. And even if you're buying $100 at a time, even if you are buying $500 at a time, depending on what your capability is, $50, $20, it doesn't matter. The point is, as long as you're getting good value in terms of your conviction, because you've got to have conviction. I mean, a perfect example is, do you have conviction around a protocol that's going to be earning a share of fees that are going to be earned? Hero Network, Hero Labs being a very good example of that argument. If you have conviction around a product that's going to yield some kind of return or fees that it's going to earn, then why are you not DCAing into that? Why were you not DCAing into GMX when GMX was at $15, $16, $17, knowing full well that thing earns fees and pays out every single day? And these are the decisions that we need to be making. You know, if we want to be participants in the space, we need to sit on our hands and we need to stop looking at all the shiny things. Oh, EOS has gone up 20%. Let me quickly open a long. Guess what, bro? You can get wrecked.
Yeah, wrecked on that. Mate, that is just waiting for Bitcoin to like just do like a 2% drop for that to like fall from grace. That's going to come down hard on people.
You know, and it's kind of like, you know, and then there's the other school. You know, you've got the other school that, you know, looks at the fibs. You know, you've got the Brian Beamish school, which is, you know, the rational investor, and you know, waiting for those reload zones, you know, looking at your fibs. Okay, is this a viable reload zone? Cool. And then DCAing in on those levels. You know, that's taking the whole DCAing strategy to the next level and just being aware of, you know, okay, the fibs say that these are the low points. You know, this is a good entry, and then you go with what the math is telling you. And that should work. So, I mean, that's what Grant was saying, you know, like for the long-term investor right now, you really are sitting on a great opportunity. The problem is that the majority of the DJs want to make their 10Xs overnight, and they're frothing to do that. They're seeing all these shiny things, and it generally just ends badly.
Yeah, and it doesn't help when people have completely round tripped like such a kind of profitable and easy market as well. So now it's like any opportunity that they get to try and score some back from the market, it's like, let's apply what worked in an uptrend, and you should be doing the complete opposite of that, which is easier said than done. Don't get me wrong, but it's people who are trying to claw back from the market, getting extremely emotional about it, and those are the kind of like areas of the market that you really don't want to be like spending your time into. It's completely PvP at the minute. Anyone who says otherwise is completely wrong, in my opinion. So it's just like all of us trading against each other. No one gives a shit. You can do it two ways, Dan. It's like, as you say, if you've got long-term conviction over a project that's in like top 10, pick wisely, because there are some unwanted visitors up on that neck of the woods. But like, let's say it was ETH, and you just wanted to slowly buy ETH every week, every 2 weeks for the next 2 years, and then sit on it for the next 5 years. Then it shouldn't necessarily matter what price you're buying at. Obviously, if you see prices where it's like shit that is quite low, then you can wait that next buy a little bit more heavier, so you're kind of getting a greater average price at a lower price entry, if that makes sense. It's obviously going to take a little bit of skill, but and as soon as people start doing that, it's like emotions start getting the better of them, and they start loading 10% of their allocation in at one price point and stuff like that. Could work. Best way to take any emotion out of it is just to set up a recurring buy. A lot of top exchanges allow you to do it. Or you just sit and wait. If you've not played the game a little bit better, you just sit and wait in stables and then wait for a complete trend reversal. Like, there's no point trying to buy breakouts when like the chart looks like this. Like, obviously the chart's horrendous. Let me bring something else up.
Oh, ETH Classic. Let's go. Look at that.
But no, for like using Bitcoin as an example, there's no point trying to buy breakouts on like charts that look like this. It's an obvious high time frame trend, which is down. Once you start seeing like popping above, retests, and then up, it's like, okay, we might be slowly starting to get out of a trend here. And then if you get like a little, I don't know, squigglies or a load of shit, but just to kind of represent, like, once you have actually broken the downtrend and then retest it to confirm that we've broken a downtrend and then start trading higher. It doesn't matter if you didn't get this entry. If we're going higher, you've got like all of this part of the move to make some money. And it's a lot less stressful when dips are actually for buying, whereas now dips are like, yeah, you need to be careful because the dip can continue. So it's like, it's just looking at a high time frame. Dan, you're such a 10-second maxi chart trader. So it's like get out to the weekly, see your support, resistance, have a little check what's going on. Use that as your reference, because there's no point buying breakouts in the 4 hour if the whole weekly time frame's completely trading against you. So that's my advice. Sometimes don't follow it myself as well. So don't be too hard on yourself if you do that as well. So
makes the endorphin rush. The endorphin rush of seeing those like minute charts or 10-second charts. Oh, Christ.
Yeah. You know, the other interesting thing from a practical perspective. So, you know, like one of the most beautiful things in this whole game is, you know, you open along in an upward trend. You open along, you know, 10x, whatever the case is, 5x, you know, and it doesn't, like, you don't ever sit there losing your mind that you're going to get liquidated. Even if you've got like a whole ton of cash, you know, you don't worry about it, because you know that you're going to go to bed and you're going to wake up in the morning and you're going to be positive. And it's, yes, sure, you get days where like things reverse. I mean, we've all been in a bear market. You get those red days, but you never live in the state of absolute blinding fear. Like, oh my God, it's going to reverse and I'm going to fucking go to Goblin Town and lose all my money. It's the complete opposite thing. You know, you're just literally in a situation where you're printing money, you know, and it's like, guys, I really miss that. I really miss it. And I would really like it to come back, please.
Have you ever opened a short? So like, have you ever opened a short and you're watching the chart, but you've got a spot bag of the same thing that you're shorting. And
yes,
you're rooting for your short to like go to Goblin. Yes. Like, come on, get down there, son, get down there. And then you're looking at your spot bag going down, or like your short bag's kind of like going up, but in a downward sense. And you're like rooting for it. I was doing this yesterday, and I was just like, oh my God, I don't actually want this to go down too much further because my spot bag is getting wrecked. But this short is oh shit. Now my short's starting to reverse. I'm like, yes, my spot bag is going up. My short might get liquidated or go. Come on, just dip. I'm like, Lord Jesus, please just dip underneath like my buy point. I don't care if I take $1 loss or like a $2 win. I don't care. Just please, for the love of God, don't wreck my spot bag, please. So then this is last night. I was sat there, Mum was watching like the TV or whatever, and then she could see me like getting really like nervous on it, and I'm like, fuck. I'm like, Mum, I'm just gonna close it. She's like, what? I'm just gonna close it. She has no idea what we're talking about, right? And it was like CSI Miami, right? They were talking about crypto. So they were talking about like this guy who'd like lost the wallet, and it turned out to be like some big murder case. And I was like, you see, Mum, it actually makes no sense what I do, doesn't it? It makes no sense. You can see from the TV. So then, yeah, back to my spot bag. I'm there just like rooting and tooting. It was so funny, man. So funny. Moral of the story is don't short or long whatever your spot bag is, because that's
yeah, or just set a stop loss, set a take profit, and then forget about
Yeah.
it.
Yeah, all that.
But you know what happens with that is that the other thing we do wrong is that we get greedy, and then you kind of like, oh, I've made 15% on this, but maybe I can make 20, and then you just go down the slippery road, and then you do the round ticket, and you're like, what the fuck did I do? I was $1,000 up on that, you know, and I just threw it all away, and now I'm back to zero, you know.
Yeah.
Anyways,
right. Should we get on to I think we're going to restructure the Tuesday streams and things like that. So we do like a little bit of an intro on chart and stuff, and tell you how bad it is in the market, and then get into more project related stuff. But I think for this one, we're going to cover, how long have we got? Like 30 minutes on like the METIS ecosystem, some of the projects, some of the developments that are happening over there, and just give a little bit more of a deep dive on some emerging products that are over there and what that could actually look like going forward. Who's going to be like staying the distance, who's actually got a good product market fit, who's doing something inventive and kind of new as opposed to being a carbon copy fork. So I think if anyone hasn't seen it yet, we released a thread on the whole METIS ecosystem. So just as a brief overview before, if anyone hasn't actually dug into the METIS, it's an optimism fork effectively. So it's an L2 built on Ethereum. One of the main differences is that with Optimism and Arbitrum, you use Ethereum for gas, whereas on METIS, you actually need the METIS token. I know I'm saying METIS, however people want to say it. I'm just going to say METIS. It's easier for me to say. So it is ridiculously quick. It is ridiculously cheap, and you can obviously find more information about that on our Twitter page as well. But just as a kind of brief overview, a couple of tools. DeFi Llama obviously kills it. They kind of bring up absolutely everything on there. It's a good kind of go-to for an overall kind of look at protocols and TVL. So effectively, the TVL chart is down from 484 million TVL across the chain down to like 50 million. And obviously that looks a little bit flattened and a little bit flat. So it did have its little heyday here where things were like popping and doing like 2-3x in a day. Now that seems to kind of fizzled out. But the most recent developments over there were the fact that Chainlink integration, so reliable price feeds, allows complete liquidations for lending and borrowing protocols. Nice tight spread on DACs and things like that. So Chainlink integration was a long time coming, and that just adds an extra layer of reliability and usability on the chain. And it also adds that extra layer of kind of Oracle security for projects that want to build on METIS. But if the Chainlink infrastructure wasn't there, then you're not going to see the likes of your big blue chip DeFi project move over there. So that came. And then the 100 million ecosystem grant, which is slowly starting to get drip fed to projects that are over there doing their business. So I expect to see a lot of incentives. I expect to see a lot more protocols that are already built port over there. I know there's a few already that have started to move over. So, gents, any opinions on METIS? Usability, anything that you've used, seen that you like? I've got mine, but I'll let you guys speak for a second.
Oh, I'm METIS vanilla, so I'm just gonna sit and listen.
So I think for me, I participated on launch. I was there November, December. There were some interesting projects initially. Obviously, there were some quick. I mean, there were a ton of shitcoin projects that came online. And there was a lot of gambling that was going on initially, and it was almost like it did the ecosystem a disservice, in my opinion, from the early days. I think also, the team have admittedly said that a couple of mistakes were made in terms of how they were managing the ecosystem. And, obviously with, kind of like full on bear, and, fortunately they had, the reserves, the cash reserves are there. They raised a substantial amount of money. They were able to get back to, the drawing board essentially, and kind of like, okay, what do we want to do right? What do we want to actually put in place? And I think they have done that. They've been more discerning around, in terms of, the METIS DAO itself. Obviously it's open source. Not open source. It's kind of like you can go and introduce any project you want on the ecosystem. No one can stop you from doing that. But in terms of the projects that, are kind of like endorsed, in a sense, by the METIS DAO, they've been more discerning around the projects that they've wanted to invite and get on board. Obviously, this initiative and this 100 million rand grant that's in place is part of that. It's kind of like, send us essentially a pitch deck and a white paper and a motivation around the kind of project that you want to set up on METIS. We'll assess and then we'll assign capital if we deem you to be worthy. Vitalik's mom is actually running that process. She's one of the founders, and she's running that thing, from what I can tell, in quite a strict way, and obviously wanting to bring like worthy projects on board, which is great, obviously, because it's like, they're obviously taking this task seriously. It's not a case of we've got a whole lot of money, now we're going to just enjoy it for our own benefit. They really are looking to create something that's long-term sustainable, which I really enjoy about it. And the other thing that's quite interesting is that, obviously, as you mentioned, Grant, you've got the blue chips coming on board now. You've got Arvo, who's it's been delayed, but they're in the process of onboarding. That's more TVL for the ecosystem. And as we know, as you so put with, TVLs, it's everything. It's what attracts the guys, with their big bags into an ecosystem. And I think that's what's going on now. There's obviously, individual projects that we can talk about. Obviously, in that thread that we released, we obviously pinpoint a number of projects that are worthwhile and that are giving good returns to guys that are staking. And obviously, the real yield narrative is also playing out in the METIS ecosystem at the moment. And I think the new projects that are being reviewed are very much in line with that philosophy. Is your project sustainable? Are people going to land up being in a situation where they're going to get slow rugged? And I think, METIS is very mindful and conscious of that. And, that's the way that they want to run this they want to run this ecosystem going forward.
What do you see as like the main projects building on here at the moment are? Like what kind of like narratives?
Well, so currently in its current form, there's like they've got the staples of any kind of ecosystem or any network that are required to allow kind of DeFi to go and flourish from that. So you've got NetSwap being the primary DEX by TVL, and you need TVL if you want to be a DEX, more TVL, lower slippage, and all that kind of shit. Hermes effectively picked up where solidly left off from, but actually executed and did it well. And that was kind of funded by Maya DAO, which is effectively a reserve currency ohm fork that used the treasury to actually go out and build the Hermes protocol. So I'm yet to see kind of if that whole kind of gauge voting bribe DEX solidly fork type thing is actually good for liquidity, because there was a lot of stuff that came out about Velodrome recently that in comparison to other more like Uni V3 or Uni V3 type DEXs, it was like the slippage was a lot higher, or you were getting a much worse deal on each trade. So particularly at high kind of volumes. So kind of I think the jury's still out on like that solidly type fork AMM model, but we'll see. Hummus is good. It's a what's the phrasing around Hummus? It's an authorized fork of Platypus, and obviously Platypus was quite native in emerging protocol on Avalanche, which kind of looked at what Curve were doing and said, well, it'd be a lot easier if people could single side stake stables as opposed to kind of constantly monitoring the stables and moving their LPs around and just removing that barrier to entry so anyone can kind of provide liquidity into a pool that allows really low slippage stable swaps. So I really like Hummus. I'd like to see some more kind of developments that were a little bit unique to Hummus built on top of that, and I'm pretty sure there's a couple of ways that they can take it. Tethys, again, another DEX. I prefer the Tethys like UI and UX to NetSwap, despite it being kind of second fiddle to NetSwap. But anyone who's around the kind of early Avalanche days would know that Pangolin was the top DEX for a long time. And then over one weekend, I just remember Trader Joe ripping and flipping TVL of Pangolin, and then that just kind of picked up steam where Trader Joe are just completely running the show over on Avalanche at the minute. Whereas Pangolin is like kind of phased out into non-existence. And then other than that, you've kind of started to see Sushi come over. They like to be on every chain, particularly because they've got this new kind of cross-chain swap integration thing going on. Synapse, kind of good cross-chain infrastructure bridge for the Beef Hero, obviously over there, doing their thing for yield aggregation. KeyDAO, they were like I don't know what previous chain was it, Phantom. They were probably over there, similar to like a collateralized deposition with their my stablecoin. So that's quite nice to see them over there. So there are projects coming over. I do want to see like a little bit more unique projects being built over here. Like it's because the way I look at it is we've seen innovation happen on Avalanche with the likes of Platypus, and now there's a couple of other protocols over there, Trader Joe doing their own liquidity book type thing. You've got that innovation. But I think in the early days of new emerging chains, people like come over, devs try it out, look at what the kind of incentives are for them to actually build over there. And then as soon as like they've got the foundations of an infrastructure for an ecosystem, then they can start building out like this new kind of innovative kind of products, because you don't want to come over and just build this like really unique product that's really, really good, and then the rest of everything around you just be pretty stale. You want to kind of like just test the waters first. And I can imagine a lot of these protocols behind the scenes have, like, put my tinfoil hat on, they're probably built on other chains as well with different products and the different aliases. So I think you'll see like the like top 10 projects over there solidify, and then innovation will come once everyone knows that METIS is going to be around for the long haul. I can imagine that's what's going to happen. I wouldn't see, as much as I'd like to see it, I can't imagine like a new innovative protocol just goes and sets up shop on METIS without kind of taking into consideration anything else that's going on around it, and then just cordons itself off to like 50 million TVL. Like once TVL starts to pick up, and once like the big dogs get over there, Arves, maybe Curve, maybe kind of Comp, and all those other people who like to go across chain, then you kind of get like legitimacy of chain, and then you start getting people who are coming over, porting their other projects over to as well. Liquidity increases, makes it the trading experience a lot better. You've got more places to actually put your money. There's more incentives and everything like that. So for now, it's kind of in its infancy, and then you'll start to see innovation build out on top of that, I think. So I always keep checking this. I always try to check in with the Telegram groups and Discords that I'm in, things like that. So I think for now, just to kind of recap, it's projects need to solidify themselves as the top dogs on this chain, and then the kind of innovation can start once they know they're kind of going to be around for the long hauls. But yeah, not too much innovation, but you know.
I think, you see, the thing is that I think we are going to see that innovation, because there obviously is this, and we are going to get an opportunity to get the head of business development on a stream with us soon. We might even record it during the course of this week. We just need a confirmation from Rick. But essentially, they will give us an insight into, how is this funding being allocated at the moment, and what degree of innovation are we going to see from that? Are we looking at products that are very much focused around this real yield, and how are they going to, derive the yield from projects that are obviously earning fees? Are there going to be, financial services products that are coming, or protocols that are going to be coming to this ecosystem? I know that we've had a discussion with a number of protocols that we're looking at METIS, which we know are very much the kind of protocols that would generate fees, which would then afford the opportunity for, the likes of the Umamis to come in and, obviously exploit, in inverted commas, that narrative. So I think you're 100% correct. This is in its infancy right now. We like to focus on, the potential opportunities that may be huge successes in the future. I mean, we do believe that, from a blockmates perspective, and in light of the research that we've done, these guys, they know what they're doing. They're serious about the product that they've put out there. I mean, from a tokenomics perspective, I don't actually think there is a single token out there that is in a better spot than the METIS token is right now. And that is that I think 1% of the initial seed investment is currently held, and the 99% of all tokens are in circulation right now. There's no VCs out there that can dump on you, and I don't think there's a single ecosystem right now that has that. And that alone should make you pretty bullish about, this ecosystem, and obviously the token itself. But more importantly, that this thing is super fast. It works on very much like on the fundamentals of the technology. This is truly is a decentralized ecosystem. You can't switch this thing off. It really is. If anyone wanted to come and turn this thing off, good luck. It's not going to happen. It really isn't. So they've got that right. They've definitely taken to heart the playbook that Vitalik put out in terms of what decentralization is, and they've incorporated, a lot of the principles that are at the essence of what Ethereum is. And in many ways, you could argue that, the way that I see it is that METIS is actually even more Ethereum based than the Ethereum ecosystem itself. I mean, I know that sounds crazy. Where they want to bring in these soul-bound tokens, the whole concept of, taking things away from a DAO structure. And that's something that we'll touch on in future, in future streams and the rest of it. But essentially, they want to create a governance system that isn't just based on DAOs, but it's based on very much a gamification of having an avatar that earns credibility through deeds. And your credibility then gets transferred into the ecosystem as a trustworthy figure. So you as an individual can actually level yourself up in terms of reputation power. And you can then participate based on that reputation power, based on what it is that you've done in the ecosystem. So it is very much taking, like the whole EverQuest and the whole World of Warcraft thing around, reputation and being able to access services and opportunities within the ecosystem that, someone who's just entered wouldn't be able to. And it's through doing good stuff and through participating in a positive way. So I think they really are taking the whole thing to the next level in terms of understanding what the market needs, understanding what individuals need. It's cheap, it's fast, and it's now dependent, as Grant was saying. I think it's now very much dependent upon to what degree of innovation are we going to see on this ecosystem, and how much value is going to be created in that innovation for the people that come in and use it.
Yeah, as I say, at the protocol level, it's just at its infancy, and this is what you'd kind of expect from an ecosystem. So kind of projects that have typically done well on other chains, just kind of forked, put over here. That just makes complete sense to me. But I think the innovation lies within what you were just saying there, Jedi. It's the fact that the whole idea of the DAC over DAO system, they're really pushing on the innovations that Vitalik has written about and kind of executing on them much quicker and to a better degree than the majority of other protocols out there. So it's like, just because the protocols at the level, not kind of shitting on them whatsoever. I think I've got a few of these anyway myself, but it's like the innovation's happening on a much broader stroke, on a network level and a kind of business development level and kind of an infrastructure level, as opposed to just waiting for kind of number to go up on these new emerging projects that are on the actual chain itself. Like this, like the protocol level innovation will come, it just will, because there's going to be incentives, and the best way to kind of incentivize innovation is to get people paid. So the innovation is there, but it's in a kind of form that a lot of other chains are beginning to kind of neglect and just kind of focus on let's get number go up, coins on the chain, so TVL and activity looks like it's going up. But I quite like what they're doing, like further afield than that, like the soulbound tokens thing, integrating the credibility on chain and stuff like that. I think that's really, really interesting. So might not be stuff that you can just ape into immediately, but if you're going to bet on a whole ecosystem as a whole, then having METIS like exposure is kind of a bet on that in and of itself, I think. But one thing I will add is like that 100 million ecosystem grant has to go somewhere. So just because like 99% of the supply is out on the market, I do think demand will outgrow the 100 million that finds its way onto the market through ecosystem grants. Like projects aren't just going to hold onto that METIS and be able to pay the developers, their business development and all that kind of jazz. So that stuff has to kind of, that will transact, and that probably will show itself on the chart at some point. But I think demand will definitely outweigh that supply coming onto the market. We've seen it with optimism that slowly started to downtrend as soon as like emissions started to outrun demand from users. But people will come over, play the game. They'll probably stay around because it's so good and the user experience is great. But there will be that supply that eventually comes out in the market. But I think in the long run, distribution is good for that, as opposed to it being in the hands of like a smaller amount of people. So distribution that happens through emissions based on incentives, I think, is a net positive. We've seen AVAX continue to completely rip to about 12, 15%, 15x over the course of the year with their heavy kind of incentives program. So something to be aware of, but not something to be too concerned of, I don't think.
And do you think,
so,
like,
I mean, just to...
again, like, oh, sorry, go on.
No, carry on, Dan. It's all good.
I was going to say, do you think a chain like this, as it does seem quite in its infancy, what benefit do you think and it's probably just the easiest way to say it, what benefit do you think having a shitcoin scene on here would do for the actual chain, in the fact that it is likely to bring people over to it? These shitcoin traders, a lot of them are actually very good traders just in general. They may see the chain for what it actually is and then, stick around. Do you think there would be a benefit to creating that kind of like very niche shitcoin scene to bring up some value there?
I think we already saw it, didn't we? We kind of seen people porting over for those like couple of weeks where the ecosystem was really thriving. I think it's good for drawing attention to it, and I think it'll always happen when there's a gold rush to any chain. But for longevity, I think it's useless, because those kind of people are just searching for the next opportunity. Then they'll just take their funds off chain if they've like squeezed some juice out of some trades on there, and then they'll just bridge to somewhere else that there's a new shiny opportunity, and then probably get stuck on Doge chain with the withdrawal period and stuff like that. So it's like people are gonna, I suppose it's a kind of good way of driving attention and focus and getting people to bridge over, but I don't think it does the ecosystem any good in the long term, to be honest. Like the last thing you want is to be known as like a shitcoin chain. You're not gonna attract big projects and big developers over there if you kind of get coined with that phrase. Like there was a few, like BSC kind of got tarnished, despite it still having like a lot of Asian participants that operate over there. But there was a lot of kind of, well, there's no way I'm going to go and build on that kind of mentality and sentiment around it, because there was that kind of shitcoin casino happening over there. But it's still, like, to say like there's nothing to say it can't do good. I just think it's not very good for, again, using that phrase, but like patient long-term capital for an ecosystem. And I don't think the funding and the METIS DAO and stuff would lean heavily into that regardless. So I mean, I could be wrong, and it could completely pop off and meta season with shitcoins could certainly happen, but I don't necessarily think it's a net positive for the space.
Oh, interesting.
I think this is a really good question, and it's a question that I'd like to pose to, the METIS team directly. My feeling on it, however, is that I don't think it necessarily is a positive thing for the most part. I think there is a place for it. We've always said this on our streams, and we've reiterated this before, is that you'll always have your weeds, you'll always have the casino, you'll always have, those opportunities and the gambling opportunities that people love so much come to the fore. I think, like Grant said, the METIS ecosystem had a lot of that at its inception because it was cheap, because it was, it really wasn't an effort for them to be able to set up shop and to run, all these shitcoin projects. But what you want is, in my perspective, or my kind of like the way that I see METIS being really solid, is kind of like an Arbitrum style, where you don't really get shitcoins on the Arbitrum ecosystem. It's about the business, it really is. I don't know why that's the case. I don't know if it was like this conscious decision to kind of limit the kind of projects, but if it's decentralized and the rest of it, then anyone can set up shop there. But for some reason, there's generally serious protocols there. There's what is the TVL in Arbitrum at the moment, Grant? Can you bring up DeFi Llama and just tell me what it is quickly?
924 million.
I thought it would have been higher than that.
No, it did. It did.
It's still very good.
And what makes Tron number 2?
Tron.
Tron. Well,
that's Justin Sun's bank account, isn't it?
Yeah, it is. Of course, it is.
Because that's crazy. There's 10 protocols there with 5.9 billion.
Yeah, they're all called Just Stables, Sun, Just Land, Just Money.
Oh my god!
It's his bank account. That's what he's.
That's his bank account. That's what it is. Yeah, it's the most transparent bank account in the history of humankind at $6 billion.
Well, at least he get taxes efficiently then.
But yeah, I think that's like, so even go on.
So just one thing, just in terms of, you spoke about incentives. I do know that, and I'm sure this will also come to light in the next week or so, is that Hummus is setting up an incentives program. I think it's going to be quite a substantial amount, and it's coming quite soon. We don't have details yet. I think the guys are just sorting out, what they can and can't do from a legal perspective, because that's the other thing about the METIS guys, is that they are very mindful of, the regulatory landscape and what it is that they should be doing and what they can't be doing. And that just, once again, speaks to, how serious they are about running a solid operation, and that's all these things that, just reinforces the bullishness on this ecosystem from my perspective anyways. Like good business practices, being mindful of the projects. And just one last thing from the governance perspective of things, which I really like, is, taking the DAO out of the picture. You mentioned it, Grant, is the DAC, which is the Decentralized Autonomous Organization. So you're taking it and you're giving individuals the power to make decisions around this thing, obviously with soul-bound tokens. And I think they are setting the precedent for perhaps the way that things will operate around governance in the decentralized space and moving away from DAOs. Because as we know, that DAOs have their problems. You own the majority of something and you can come and vote on your own and just completely, like eliminate everybody else's opinion, whereas DACs work differently. So, and we'll also be speaking about that in the coming weeks in terms of how it works. And I reckon they're going to land up setting a precedent in terms of how these organizations and how decisions are made in a decentralized space.
Yep, agreed. That was our main But yeah, I think that's it from us today. So we did pass 1,000 subscribers, which was good. 10,000 next. So if everyone could like and subscribe if they haven't already done so, that'd be really good for us. Just trying to incentivize us for our own emissions to get ourselves on here and keep motivated to continue to churn out more content. So if you could do that, that'd be great. But yeah, gents, thanks for joining us, and I think we've got a few more this week, so we'll get them posted out as soon as it's ready. But yeah, thanks everyone.